Hey everyone, this is TJ Crypto World, and welcome back. If you've been tracking Pi, you know the past week has been a battlefield between bullish hopes and bearish pressure. In this video, we'll dissect June 3rd's price action, decode the MACD and RSI signals, and highlight key support and resistance levels. By the end, you'll know whether buyers can regain control or if the bears are still calling the shots. Stick around, because we'll reveal how today's golden and death crosses set the stage for volatility. What the weekly decline really means for medium-term sentiment, if Pi's latest uptick to $0.6590 is just a blip or the start of a rally, the clear levels every trader must watch next. Before we dive in, hit like, subscribe, and ring that bell so you never miss a real-time update. Let's get into it. 1. 24-hour snapshot versus weekly reality, 1:20 to 2:30. Over the past 24 hours, Pi coin eked out a 0.8% gain, a modest nod from the bulls. But zoom out, and you'll see a different picture. On the weekly chart, Pi is down 13.0%. That's more than a simple pullback, it shows bears have maintained control for several sessions. In essence, we're seeing mixed signals, a short-term bump in price, yes, but a broader downtrend that's still intact. This tug of war suggests traders are on guard. Buyers want to spark a bounce, sellers remain skeptical. The big question, can this 0.8% rise turn into something more substantial, or will it just fizzle out? 2. June 3rd price action, golden cross to death cross, 2:30 to 4 o'clock. Let's zoom in on June 3. Bulls came out early, igniting a golden cross on the MACD. When the 12-period EMA rose above the 26-period EMA, an initial green flag signaling momentum might shift upward. 2 o'clock UTC, buyers drove the RSI above 70, entering overbought territory. That push tested resistance at $0.6590. At first glance, hitting that resistance shows bulls had conviction this morning. But the story changed quickly. 2:20 UTC, the MACD generated a death cross, with the 12 EMA dipping under the 26 EMA. That bearish flip invited sellers to pounce, and the price slid south. Looking at the Pi/USDT 5-minute chart, the first death cross erased gains, confirming sellers regained control. 7:40 UTC, another death cross appeared, cementing the downtrend. 8:15 UTC, RSI plunged below 30, hitting oversold territory. That moment often signals a short-term bottom, as selling exhausts itself. Traders who caught that oversold RSI around 8:15 started eyeing a bounce, or at least some stabilization, hoping Pi could re-establish support near 62 cents or 60 cents. 3. Interpreting RSI and MACD signals, 4 o'clock to 5:30, why do these crosses matter? MACD golden cross, it tells us the recent buying pressure has shifted momentum upward. When that happens near key support levels, it can spark a rally. MACD death cross, it indicates momentum has reversed lower. Price is technically oversold, a death cross can keep selling pressure alive for a while. RSI overbought, greater than 70, suggests a short-term peak, selling often follows. RSI oversold, less than 30, signals a potential rebound area, buyers may jump back in. On June 3rd, Pi's RSI swings from overbought to oversold within 6 hours. That's a sign of extreme volatility, and whenever you see extremes on the RSI, it often precedes a sharp countermove. 4. Volume context, are buyers fading or gaining? 5:30 to 6:30, let's layer in trading volume. On the surge toward $0.6590, volume spiked, confirming that those moves were backed by real demand. But once the death cross hit, volume rose even more on the sell-offs, showing conviction from the bears. 5. Key levels to watch, support and resistance, 6:30 to 7:30, given the swings, here are the levels every Pi trader must watch. Resistance zone, $0.6590, $0.6800, that's where bulls tested twice and faltered. A clear break above 68 cents with volume would signal a more sustainable rally. Immediate resistance, $0.6590, today's high, tougher to crack without broader momentum. Support 1, $0.6200, $0.6300, the area where bulls found footing after the 8:15 UTC oversold signal. If Pi can hold here, that's bullish short term. Support 2, $0.6000, a psychological round number level and last line of defense. A breach here could open the path back toward $0.57, $0.58. 6. Market sentiment and broad trends, 7:30 to 8:30, beyond the charts, sentiment matters. Surveys of social media, on-chain activity, and Google Trends show community interest for Pi has dipped over the past week, even as larger crypto markets rebounded. That lull in excitement makes it harder for bulls to mount a sustained push. Nonetheless, underlying developments, like upcoming Mainnet features or ecosystem partnerships, could flip sentiment quickly. If a positive news release arrives, we might see a rapid shift upward. Right now, though, caution prevails. If you're serious about navigating Pi's volatility and want more real-time updates, smash like, subscribe, and hit the bell icon. Drop a comment with your thoughts. Will Pi break 68 cents or dive back to 60 cents? Let's discuss. Thanks for tuning in to TJ Crypto World. Remember, the next few sessions will be critical for Pi's direction. Whether bulls reclaim control or bears tighten their grip, we'll be tracking every candle. If you want deeper technical breakdowns, check out our video on multi-timeframe analysis for Pi, link on the screen now. Stay sharp, trade smart, and I'll catch you in the next update.